Welcome to Different Makes a Difference, where we discuss investment matters that matter to everyday investors. Join Odlum Brown's equity analysts as we examine pertinent topics in today's markets and look at things a little differently. Odlum Brown is an independent Canadian investment firm. We provide integrated wealth management solutions to help clients achieve their financial goals, and we've been doing so for over 100 years. Join us for some lessons we've learned along the way that can make a difference for the future.
Hello and welcome to Different Makes a Difference. I'm Stephen Boland. Our topic today is not differentiated. There has been a lot of commentary about the SpaceX IPO already. But given how much attention it is getting, we thought it would be worth adding our 2 cents. SpaceX was founded by Elon Musk, and as we're recording this episode, it's about to do an IPO, which stands for Initial Public Offering. That's when a private company sells shares to the general public for the first time, and it will begin trading on a stock exchange. Will SpaceX's stock shoot to the moon, maybe even Mars, or will it fall back to Earth? To discuss, I'm joined by Stephen Zicherman, who covers technology for Odlum Brown. Stephen has looked into SpaceX and has followed Tesla, Elon Musk's electric vehicle company, for a number of years. Thanks for joining us, Stephen.
Always good to be here, Steve.
So you read SpaceX's financial and regulatory documents. Let's start off with what caught your attention.
Steve, I have to admit, I've been analyzing technology companies for a long time. And when I read this document, I felt like I've never quite read something like it. It starts off with Elon describing its company's mission. I'll read this to you. To build the systems and technologies necessary to make life multiplanetary, to understand the nature of the universe, and to extend the light of consciousness to the stars. That is a huge statement. Now, I'm a big sci-fi fan, maybe not as much as Elon, but I think that people like Elon grew up watching Star Trek and being fans of Star Trek, and this company is really designed to make his science fiction dreams come true.
Interesting. That's a very interesting mission statement, if you will, very different from a lot of companies. One of the things the financial documents got into was a breakdown of the business. And most people, when they think of SpaceX, think of rockets shooting up into space. But there's a bit more to SpaceX than that. They're made up of 3 segments: connectivity, space, and AI. Let's start with connectivity. Can you tell us about that?
That's a great place to start. So connectivity is their biggest business and one that generates cash flow. It's one that we actually like. Connectivity is its satellite internet business, and it operates under the brand Starlink, which you might be familiar with. It's a cash engine. SpaceX uses its rockets to launch what they call a constellation of low-orbit satellites that beam broadband internet down to homes, ships, planes, and increasingly directly to people's cell phones. It's a profitable business. So last year, connectivity generated about over $11 billion in revenue and just over $4 billion in income. Starlink has 10 million users across 164 countries. It's a real business that's operating at scale.
And how big is this compared to the other parts of SpaceX?
Yeah, a lot bigger. So maybe we'll talk about space, the next biggest business after that. So space is SpaceX's original business. This is a company that builds and flies rockets and spacecrafts. It's involved in launch and other related activities, including its Dragon spacecraft, which carries cargo and astronauts. It's like the trucking company of space, which puts satellites, supplies, and people into orbit for people like SpaceX itself, for NASA, for the military, and for other commercial customers.
Is this a good business? Is this profitable?
Well, it's the least profitable business of the 3. Maybe over time, it becomes a much larger or more profitable business, but today, not very profitable. It did $4 billion in revenue compared to $11 billion at connectivity, but it's running at a large loss, and that's largely from spending on its Starship development.
Okay, so Starlink's the biggest business. You said that one's a pretty good one. It's profitable. Space is a bit smaller. AI, the third business, is smaller again, I think?
Smaller again from a revenue basis. So this is SpaceX's newest business. It acquired a company called xAI in February of 2026. xAI is a combination of Grok, what's called Grok AI models, and Twitter, which is now known as X, the social platform.
And is this a good business?
I think it's similar to space. It's a smaller business, just over $3 billion in revenues, and deeply unprofitable today. It takes a lot of money and capital expenditures to build data centers. So it lost just over $6 billion last year.
So when you look at the aggregate company, how much revenue does SpaceX generate in totality, and what does its earnings look like?
Sure, good question. So in totality, it generates between 18 and $19 billion of revenue, $5 billion in losses, and a positive $6.6 billion in adjusted EBITDA. Now, we don't think very highly of the metric that's called adjusted EBITDA. But if you contrast some of those numbers with the market cap that it's suggested to come public at, 1.5 to $2 trillion, you're paying a lot and receiving little relative to what it might IPO at.
Okay. And EBITDA, for those interested, is called earnings before interest, taxes, depreciation, and amortization. So it's not your bottom line figure. It's a number before other expenses that sometimes overly flatters a company.
Yeah, I was going to say one of our favorite investors, the late, great Charlie Munger once said, when you think of EBITDA, think BS.
Yeah. Okay, so Stephen, you followed Elon for a long time. I know you've visited the big Tesla factory down in California. We've both read books on Elon Musk. He's a divisive character. There's people that love him and there's people that hate him. What's your take on Elon?
Yeah, he's definitely a polarizing figure. When we did a presentation on SpaceX internally, and during that presentation, one of the recurring themes was don't underestimate Elon. Another way of phrasing that is don't bet against him. Now, we wouldn't necessarily pay a significant premium to be a shareholder in one of his companies. We just think that as it relates to Tesla and to SpaceX, he's incredible. He gets a lot of things done. He has changed the world in some ways, but we don't believe paying a premium to invest alongside Elon is worth it.
Right. You reminded me the other day about we used to go down to Charlie Munger's meetings in Los Angeles when he was the chairman of a company called Daily Journal. And he was asked about Tesla. This would have been probably 7, 8 years ago. And he was asked about Tesla and he was asked about Elon. And I thought his comment was interesting that never underestimate the man who overestimates himself. I think Elon Musk is peculiar and he may overestimate himself, but he may not be wrong all the time. Thought that was quite an interesting take by Charlie Munger.
Yeah, I think that sounds about right. And just going back at that same meeting that we were at, I think somebody was asking him about Tesla stock. And he also said he wouldn't buy it, but he also would never short. And I think we feel the same way about SpaceX. It's interesting. It'll be interesting to watch. We don't want to bet on it because there's a giant premium that's associated with anything that Elon Musk is involved in. But we also wouldn't want to go short. We're just happy to watch from a distance.
Okay. Let's just dig into that a little bit more. And you did reference this earlier, but tell us a bit more about the valuation and why that makes you uncomfortable.
Yeah, so $1.8 trillion is an estimate of what it might close the day of its IPO. And I think the range there is 1.5 to 2 trillion. That's a big number. When you contrast that to its revenue and profit generation at 20 billion in revenues and even less profits, even if you were to compound those numbers at a pretty good rate for a few years, you're still paying a gigantic multiple on sales, never mind on earnings. And the statistics will show you that if you overpay too much, or if you pay too high a price on a sales figure, the chances of earning a reasonable rate of return are much lower.
So it's priced very richly. And what about the outlook for the business? You mentioned that you like the Starlink business, the other two a little bit more uncertain. Is this the type of business you'd like to own at the right price?
I think so. And we did some rough math and making some pretty aggressive growth and margin assumptions. And we think we can derive a value, let's say 500 billion to 800 billion, which would include that Starlink business. So what if this company trades at half its proposed IPO price? It could look a little bit more interesting. More often than not, companies will trade below the IPO price at some subsequent point. That's just the nature of the market.
So you can sit back and see how the business unfolds and maybe a better opportunity will surface down the road. And it reminds me of some other names that we've owned over time or recommended over time. We recommended Airbnb not that long ago, 5 years after its popular IPO, and we were able to buy it at the same price roughly as the IPO. Tim Hortons, I remember recommending that one that must have been about 15 years ago or so, it was a really hot Canadian IPO. And the same thing, we waited and recommended it several years later for the same price. And remember, Meta, Facebook was the
Right.
same. I think that one actually fell a lot. So maybe there's opportunity in this one down the road. In both cases, the businesses grew, earnings grew, yet the stocks did nothing for a few years following their hot IPOs. And the valuations got more interesting.
And you mentioned the acronym IPO standing for initial public offering. We joke that it should stand for it's probably overpriced. And I think we think that, it's a matter of timing. When a company goes public, the seller of the stock is choosing a time that's attractive and appropriate for the company. As a buyer, you want to time the purchase at a time that's good for you. So maybe similar to buying a house. Imagine going to an open house on a Sunday and it's springtime and there's 50 people crawling inside and the realtor says to you, we're taking bids at 5 p.m. today. You're buying under circumstances that are probably more amenable or better for the seller than for you, the buyer. We'd rather be buying in the wintertime when people are away on vacation and we can buy more on terms that suit us.
Makes sense. Yeah. Are there other companies in this industry that could be interesting besides SpaceX?
I'll be honest, Stephen, preparing for this, I had to look it up. We don't normally fish in these kinds of waters. I found a company called Rocket Lab, one called Intuitive Machines, and maybe another one called AST Space Mobile. Now, we haven't taken a look at companies like these because most of them trade at valuations that are pretty detached from their earnings. We generally shy away from what we would call these story stocks, companies that are narrative-driven companies. We prefer cash flows, and similar to the space unit inside SpaceX, these companies are not yet cash generative for the most part.
Right. It doesn't match the typical reasonably predictable, highly profitable, sensibly priced stock that we tend to look for, and it tends to treat investors pretty good over time. A lot more speculation here.
Exactly.
What's going on now, whether it's the SpaceX IPO, there's talk of Anthropic and OpenAI doing IPOs. What does this say about the market backdrop?
Well, I think it's pretty frothy. As I was saying before, a company will IPO on its terms when it thinks the market could absorb that stock coming into the market. It's not necessarily a market timing tool per se, but sometimes you have, it's very rare to see an IPO in a down market. So it seems like there's a lot of appetite for more speculative companies. These are very large market cap companies that were able to stay privates for a long period of time because the large private market was able to fund those companies. But the SpaceX IPO, they're raising $75 billion. That's very hard to do in the private markets. That's a large sum of money. So these companies are now at an age and stage where they have to be public. They want to continue to fund their operations at the scale that they're thinking about.
Yeah, and it's a time when greed and fear of missing out, FOMO, can really take hold. And at those times, it's probably more important than ever to stick to good investing discipline, even though this can go on for some time. Sometimes when emotions take over and the market gets a little frothy, it can continue on. It can be ever more painful to kind of stay cautious and stay sensible in that environment. So it'll be interesting to see how all of this plays out.
Yeah, when we think about investing, you can really boil it down to what are you paying and what are you receiving? And in the case of SpaceX, you're paying a very high price to receive a good business with other businesses that might have great potential. But the difference between what we're paying and what we're receiving is really too far a bridge for us.
Yeah. Okay. Well, I think that's a great place to wrap it up, Stephen. Thanks for joining today, sharing your thoughts on what is a highly hyped IPO. I'm going to end with some closing thoughts. A lesson I learned early in my career was to be cautious around IPOs. Some get a good pop in share price in the short run. Some turn out to be great over the long run too. But studies have shown that IPOs on average deliver below market results over a 1 and 5 year time frame. And if you think about it conceptually, in an IPO, owners are choosing to sell a stake in their firm. These are knowledgeable sellers. They know their company well, and they are saying it's a good time to sell some stock. So our default position should be cautious. And that is even more the case for hot or popular IPOs, when greed and FOMO take hold. Are you likely to be getting a good deal when everyone else wants the same thing? What am I paying versus what am I getting? SpaceX looks like it'll be priced as one of the most valuable companies in the world. Yet its revenue size would rank around 200 in the United States. Last year, its revenue was about the same as General Mills, the maker of Cheerios, which has a market cap of around $18 billion. And General Mills is profitable. SpaceX is not. SpaceX will likely grow much faster than Cheerios, but at well over $1 trillion, investors are paying a high price for that growth. Whether you like Elon Musk or not, he has accomplished amazing feats. That said, we're all happy to sit on the sidelines with SpaceX. We may be wrong, particularly in the short term, but we feel better owning stocks that may be less headline grabbing, but that offer solid return potential and a lot less downside risk. Thank you for listening. If you enjoyed this episode, please hit the like button or the follow button, and you'll be notified of future episodes. We look forward to talking again soon.
Thank you for listening to another episode of Different Makes a Difference. Just as every individual is unique, so are your financial circumstances. Be sure to talk to your professional advisors for advice related specifically to you. Our podcast is for general information purposes for Canadians only. The views expressed are those of the presenters and may not reflect the opinions of Odlum Brown. Be sure to check out our full disclaimer and subscribe to the podcast at odlumbrown.com/differentmakesadifference. Odlum Brown is a member of the Canadian Investor Protection Fund.